The richest people on earth barely pay income tax. Not because they cheat, because they almost never sell anything. They found a way to spend millions while staying on paper almost broke. The secret isn't a hidden account, it's debt. Here's how the rich use debt to get richer and why you were never taught this. Most people think debt is the enemy, something to escape. And for one kind of debt, that's true. But the wealthy split debt into two completely different things, and they use one of them as a money machine. It even has a name: buy, borrow, die. Let's break it down. Step 1: buy. The rich put their money into things that grow: stocks, real estate, businesses. Then they do the opposite of what you'd expect. They never sell. Because the moment you sell an asset that's gone up, the government takes a cut: capital gains tax. So selling is the mistake. Their assets just sit there, quietly getting bigger. But that creates a problem. If they never sell, how do they get cash to actually live? Step 2: borrow. Instead of selling, they borrow against what they own. A billionaire points at a stock portfolio and says, "Lend me money against this." The bank says yes, often up to half its value, at a low interest rate. And here's the magic: borrowed money isn't income, so it isn't taxed. They now have millions in cash to spend, and they never sold a thing. They never paid a cent in capital gains. Step 3, and this is the part that breaks your brain: die. They never fully pay the loan back. They just keep borrowing for life. Then, when they die, the law resets the value of their assets to that day's price. Every dollar of gains they ever made, erased, tax-free, passed to their kids. Buy, borrow, die. A loop where the money grows, the taxes vanish, and it repeats across generations. But before you call your bank, here's the catch: debt cuts both ways. If the market crashes and your assets drop, the bank can demand its money back instantly and force you to sell at the worst possible time, the exact thing you were avoiding. These loans also have floating rates. The cost can climb. This works because the rich have a cushion most people don't. For everyone else, the same move can be a trap. So the real lesson isn't go get a loan. It's that the rich don't play the same money game you do. While most people earn, get taxed, and spend what's left, the wealthy buy, borrow, and let time and the tax code do the rest. The system rewards owning assets, not earning a paycheck. And now you know the game they're actually playing.